Boom! What's up, Waves Capital? It's Royce Jacob. Welcome back to the channel. And in this video, we are going to be talking about how the Mauna Loa Volcano Eruption that just occurred will be impacting Bitcoin and the stock market. And to sum it up, the answer is probably not at all. But as many of you know, at least I think many of you know, I do live on the big island of Hawaii, and Mauna Loa is right over there. So I thought it'd be fun for us to watch a few videos of this. Just take a look at some pictures that were taken. This is just like right down the street from where I live, or my house right now, where I'm recording this. And the sky looked absolutely crazy this morning in the wake of this eruption that hasn't happened in nearly 40 years. So we'll just kick off the video in a fun way. I figured watch a few of these short clips with you guys and just discuss this pretty rare natural event. That said, I do want to tie this in to trading in the market somehow, because we do have a few things that I actually want to read over that are directly correlated to the markets, because of course that's what we focus on here on the channel as traders. But I do want to tie in some parallels, some weird parallels. You really got to dig for them, but you guys, there are some parallels to be drawn between the way you think about an erupting volcano very close to home, and the way you think or can think about being a trader in this very volatile, very just crazy stock market that we've been trading to. So I will, and trust me, you guys, I did have to dig for these parallels, but there are some parallels, and we will just use that to segue into talking about the market. So after we talk about some of this fun, and maybe fun isn't the right word, but very exciting, very unique volcano eruption that just happened. And I want to preface this by saying that no one has been injured. Everyone is safe. There is an ash fall warning. So we do have to stay inside. Thankfully, we have AC. But everyone, as far as I know, on this island has not been directly impacted or been directly injured heavily by this lava. Okay. So that said, when we start talking the markets, we are going to be taking a look at the charts. We're going to be taking a look at 4 charts today. Kicking it off with the US dollar index, the golden rule of macro trading and macro analysis. VIXY up, US dollar index once again is the VIXY. VIXY up, pretty much everything else down. The contrast you can see here on the watch list is a good example of that. VIXY green, Bitcoin, the S&P 500, the NASDAQ, all red. So after we take a look at the VIXY, we will take a look at Bitcoin, and then we'll take a look at the S&P 500 and the NASDAQ as well. Okay, I do want to preface this by saying that I do still believe that a winter rally is coming. I do think that there is hope going into December, although we are, as of right now, November 28th. We're not kicking off the last week of November on the brightest note, but I do still hold faith that we have one more wave to the upside ahead of us. And I will also be talking about that after we talk about the volcano as well. Okay. So again, talk about the volcano, talk about good old the work of Miss Pele. Take a look at the charts. But before we take a look at the charts, after the volcano talk, we will read through this CNBC Pro article titled "Deutsche Bank Maps Out Specifically How Stock Market Will Trade for the Next 12 Months as Recession Hits." So we're not going to read too much of this, you guys, but I do want to read the first few paragraphs, just talking about what Deutsche Bank sees. And I'm not going to say, you guys, of course, these are just analysts, like pretty much everyone else who's paying attention to the markets. They are a little bit more accredited, which as they should be. But I want to talk to you guys about this specific analysis out of Deutsche Bank, and just talk about how I think, why I do put some, I personally think something similar to this could happen. Maybe not to this extent, but it does reinforce our kind of year-end Christmas rally as we head into the new month of 2023. So talk volcanoes, cover this recessionary article, and then dive into the charts and just close it out there. Okay, so to kick it off, I'll just read through this guy real quick. You guys, is from the Trade Alert newsletter that I shared, of course, with the newsletter group right before recording this guy. So let's read over this. We could watch. We'll probably watch this video, just maybe a minute or two of clips. But again, you guys, crazy times, and it's just exciting, considering it's on the home turf. It's right on home soil. So now, this news doesn't necessarily concern the markets, but I figured it would be cool to share. Again, we will draw some parallels. Early this morning, our volcano, Mauna Loa, also the largest active volcano in the world, which is crazy, erupted for the first time in decades. Considering it's on the opposite side of the island, my family and I aren't personally being affected by lava or anything cataclysmic, but we are under a falling ash advisory. In ancient Hawaiian culture, these are known as Pele's tears. Pele was and is and was believed to be the goddess of volcanoes and fire. So again, Madame Pele, we learned about that all the time growing up. The sky looked absolutely insane just before sunrise, and this was a picture captured a few miles below my house. So again, you gotta look at that glow. This was going on from about 2 to 4 a.m. and I just caught a very, very brief window of that because I do enjoy my sleep. But there are plenty of pictures. You guys can go Google it if you want to see more stuff. But again, we will take a look at some pretty exciting clips here right after this. And maybe we'll take a look at the clips now. But I do want to... we'll take a look at the clips now, and then we'll talk about the parallels to segue once again into reading this article, which I'll put right there now. So I think this one's the shortest, but I do think it'd be coolest to watch this one because it's more recent. They got more content. 40 years, it's insane. Oh, we won't watch this whole thing, you guys. It's insane. At this point, that's a good caveat. I know I'm smiley about this just because it's such a natural, such kind of a beauty of nature, and it's again, it's scary and it's insane. And it is potentially harmful to people, which is very sad. And not people, because lava actually moves very slow unless it explodes, which is not what's happening. The volcano is erupting, but it's not like a Mount Vesuvius situation. If lava is flowing, say, towards your house, you have plenty of time to evade it and even collect a bunch of your things, but your house is obviously going to be a goner. But at least for the most part, people are safe unless, again, it's a Mount Vesuvius style eruption, which this is absolutely not. So, yeah, Mauna Loa. This is Mauna Loa right here. I'm pointing. Yeah, that's Mauna Loa. And then Hualalai right here is where I live. Okay, so I live on Hualalai Mountain. Mauna Loa pretty much consumes the majority of the mountain. It's just the majority of the island itself is Mauna Loa almost. So, yeah, come this month probably we're gonna get a bunch of snow up there as well. So you're gonna get snow and lava, which is cool. So there's no need to look at this stuff. Yeah, then we're just seeing these pictures that we're all taking this morning. 6 shots. But that's that, you guys. We can just close that out. And yeah, let me know if you guys were aware of this and just what you think about volcano eruptions, I guess. I don't expect you to have any thoughts on it. But let's segue into the actual tangible takeaways of this video. Natural events like this provide a good reminder of how little control one has over the divine and or uncontrollable. To tie this back into trading before we hit the charts, which we did in part 2 of the newsletter, of course, there are, strangely, parallels between a volcano erupting and the financial markets. There will always be factors beyond your control, but as long as you're prepared to navigate those unforeseeable factors and move forward, everything will be just fine. And again, this is a bit of a stretch. I can say pretty confidently that I have been far more stressed in certain market positions and playing certain trades as opposed to the stress I feel with Mauna Loa exploding. Honestly, I feel pretty much zero stress at all. Again, we're staying inside. We're blessed to have central AC and we can keep everything ventilated and keep baby's lungs nice and safe. But again, you guys, it is stressful. I know a lot of people are stressed, and there are a lot of people who have the right to be stressed. And again, you guys, whether it's any aspect of life, you are always gonna face curveballs, going to face events that just come out of the ether that are, once again, divine and or uncontrollable, and you just have to do your best to handle them rationally and keep your eyes forward, keep your eyes on the road, and move on. Okay, so I know that was kind of a stretch, but I wanted to tie this back in somehow. Excuse me, guys. The ash in the throat, but I did want to tie this in somehow, and once again, I thought it would be cool just because this was on again really close to home to talk to you guys about, just for a fun video. The markets are the markets right now. We're heading into Christmas. Everything's a little topsy-turvy, but Again, you guys, I do still think one more wave to the upside is ahead of us. And before we get to reading this, you guys, if you do want my daily newsletters, I was scrolling real quick past past the trades because I had the trades between the intro and a little volcano piece. But if you guys want to know, and I will read through this actually before we read over this because they do have some parallels there as well. If you guys do want my daily newsletters, if you want a complete breakdown of my entire personal portfolio, which I do update every single trading day during market hours, and then again, you receive these multiple newsletters. First is my trade alert. Next up, I write the price targets newsletters where I include a bunch of charts, all the growth stocks we're excited about, and some macro talk as well. If you guys want to sign up, if you want to join Waves Capital for real, that's going to be the first link in the description box down below. You can select any of these pricing plans, $15 a month, $40 for 3 months, completely up to you. You can try free for 7 days, and if you don't like it, you can just peace right out. But I do trust if you guys give it a shot, you will be sticking around, and I'm pumped for what's to come. As we close out the year and as we head into the new year of 2023, new year, new beginnings, same money, okay? So again, that's the first link down below if you guys, again, want to join Waves Cap, and I appreciate it if you do, and if not, no worries at all. I do appreciate you watching this video. So let's read over Deutsche Bank's analyst, I guess, conclusion of how this recession could potentially play out, and then we'll dive into the charts and kind of talk about our own thoughts as we head into the new month of December once again. So the current bear market rally could continue into the new year before, quote, following the typical recession playbook, according to Deutsche Bank. The bank outlined its view for the market over the next 12 months in a note Monday. It sees the S&P 500 climbing to 4,200 by the end of this year, about 4% from where it closed Friday, or about 6% from where we are now because we pulled back today, and reaching 4,500 by the end of the first quarter. So that's quite the impressive rally, at least from this point on. Binky Chada, I think that's how you say it. Sorry if I said that pretty whack. Chief Global Strategist at Deutsche, Binky C, I'm going to say from now on, noted that he sees the S&P 500 holding roughly flat in the second quarter before a big downturn in the third quarter. In the third quarter, Chada says he sees the S&P 500 dropping to 3250. That's 19% below Friday's close. So that's obviously, especially if we head to 4,500 by the end of the first quarter, 4,500 to 3250 in the third quarter is quite the dip in the span of 2 quarters. Or I guess almost 1 quarter, because you were just talking about Q2 2023 at that point. Historical peak to trough recession declines are well explained by initial valuations, which were very high, and by the magnitude of earnings decline, we expect negative 12% versus an average negative 15%. Putting these together points to a negative 33% decline from the S&P's record high, he said. Okay, so 33% correction, peak to trough during times of recession. That is the average S&P pullback. And again, you guys, there are a lot of things, a lot of metrics to look at. We did recently discuss the, we'll dive into the charts now, but we did recently discuss in, I guess a couple of weeks ago now, the reaction that the markets see the year following midterm elections. So obviously we just had a midterm election. The year following that, historically, I wish I could have pulled it up, but historically, you guys, you can take my word for this or just go find that old video. The markets do see almost, I think 9 out of 10 times, the markets did see pretty significant gains in the years following midterm elections, which would be 2023. Okay, so that's that, you guys. Let me know in the comments down below what you're thinking about the markets right now. Do you think it's still possible for us to see a Q4 rally, a Christmas rally as we head into the new year? Or are you super bearish? And whatever your opinion is, please elaborate and let me know why, because I'm always interested to hear you guys' input so I can, so I can take those into consideration. Hey, maybe it might alter my decision making as well. So VIXY up, everything else down. The US dollar index right now is having a good day. Again, VIXY up about 0.5% while everything else is declining. Once again, really proving the golden rule of macro, which is just the balance and just kind of the nature of the balance between the US dollar and every other financial instrument, okay? Because everything trades in dollars. That is the primary reason for this. When something trades in dollars and the value of the dollar goes up, that's innately renders the other assets worth less. Not worthless, but worth less. Okay. So VIXY is currently printing a bear flag in the shorter term, short to medium term, dating back to earlier this month. We did see that massive sell-off on November 4th. Over the course of that sell-off, we did break the line of support of VIXY's ascending channel that it has been in for quite a long time, or a very significant line of support that it's held since really the beginning of this year. In that sell-off earlier this month, we did break that support. And that broken support did, or I guess that sell-off, you could say, that spanned about a week, did create the flagpole of this bear flag formation. So bear flag, evil twin of the bull flag, inverse twin of the bull flag. Obviously, flagpole followed by kind of a range or triangle formation. This is not really either of those, but it does have this kind of range formation aside from divulging out of this range for a little bit. But I'll call this kind of a bear flag. Again, you guys, technical patterns are more psychology or psychological tendencies in visual form. It's kind of how I think about it. So even if it's not perfect, even if it's not, again, a descending triangle or ascending triangle, I guess, in the bear flag situation, it's still kind of the same psychological pattern. You see the big sell-off followed by some sideways trading, usually resulting in that second wave to the downside. Again, this is kind of a two-wave, more of a two-wave as opposed to a bull flag or bear flag formation. And again, it works on the way up or way down. You see a big move, a lot of volume creating a significant move in either direction, followed by sideways trading, really displays kind of a lack of interest. But then you get that second wave, that kind of second reinvigoration of the overall trend. And in this case, the trend is broken. The trend is now to the downside. And I do think this bear flag will play itself out as such, or this will play out as a two wave to the downside, which of course is good news for that green wave. So it's actually, sorry, I did forget to read through this, but I'll read through this right now before we dive into Bitcoin. And then we'll just close it out by rapid firing Bitcoin, the S&P 500, and the Qs, okay? So Monday, the markets are seeing some red as we kick off the final week of November. There is some macro uncertainty when it comes to the geopolitical landscape. So primarily, when I say that, there are some protests in China over the potential lockdowns, which of course is bad for supply chains, and there are a lot of potential cascading reasons that could be bad from an economic perspective. But again, you guys, it's kind of like what's new at this point. But in my mind, the majority of just general sell pressure is coming from the combination of tax loss harvesting, which is where you sell your losing positions, lock in the loss to offset any revenue generated by your day-to-day jobs over the course of 2023. I'm doing much of that this year, if I'm being completely honest, and I'm sure many of you are as well, because it wasn't the best year for the markets. But in my mind, people needing liquidity for the holidays. Okay, you need money for Christmas presents. Everyone's still spending. Everyone's still big spending. Okay, Black Friday just passed. I'm sure everyone needed some liquidity for Black Friday, Cyber Monday, which is today, and you got to get the family gifts. That does take priority over some common shares of the stock, and the general lack of buyers, to put it simply, because everyone's just kind of running out of money. So regardless of these factors, I do stand by my belief that we have one more green wave to ride prior to the new year, and I'll continue to position myself around this thesis. And the primary fundamental reason for this, you guys, is because there is still record amounts of hedge fund capital and institutional capital that is sitting on the sidelines waiting to pounce. Right now, we're pretty much trading in a complete technicals market, a market ruled by technicals. And the reality of institutional capital and hedge fund capital is that it's pretty much all dictated at this point by quants, okay, or by algorithms. So technicals rule all, I do still think, and this Deutsche Bank, again, one of the largest investment banks in the world, believes the same, that we rally into the new year. And again, the technicals would support that for the SPY. So before we move on to the SPY, Bitcoin right now is also printing somewhat of a bear flag, but as I said in this morning's newsletter as well, the longer the range plays out following that significant move, and this works for a two-wave to the upside as well. The longer this range plays out, or the triangle pattern of a bull flag or a bear flag, the longer that extends, the less likely the resolution becomes. Okay, so the longer that this range on the bear flag plays out, the less likely it becomes that bear flag resolves as a bear flag. Okay, and it's very likely that we do break to the upside out of this range, because we've been going for quite a while. I mean, since the initial sell-off, November 9th. It's been almost 3 weeks now. So I do think a break to the upside is possible. I am an optimist, as many of you guys know. So the glass half full guy in me thinks that upside is likely, especially considering Bitcoin is holding up decently well. The fact that Bitcoin isn't down as much as the S&P and NASDAQ is pretty damn impressive, especially considering poor BlockFi did officially file for bankruptcy today. RIP to them. But I do think upside is very possible, especially considering Bitcoin has held this range and kind of this floor so well. And again, optimistic guy in me thinks that upside is very possible. But the technical guy in me, the objective side of me, wants to say that the odds right now are 40-60, maybe even 35-65 upside downside odds. Okay, so that's Bitcoin, but ultimately the price action of the S&P 500 and the NASDAQ due to their high levels of correlation will impact Bitcoin. And although the short term is looking a bit bleak for the S&P 500 and the NASDAQ, I do still think it's possible again for a good old bull trap to play, or a bear trap. Good old bear trap to play out, because we've seen plenty of those, and I think another wave to the upside is in the cards over the coming week. If you go watch my recent video that I posted, I believe the day before Thanksgiving, I did set December 1st, which is this Thursday, as my upside target range, or target date, which is still possible, but again, you guys, I don't have a crystal ball. It's fun to set specific dates like that, just in the case that you're right. But the point is more so that I do think the SPY and the NASDAQ and the greater markets do have one more wave up in them over the coming weekend or weeks. I do think by mid-December, we will probably see this wave. So mid-December, I think we will see this next wave to the upside, even if the next few sessions, maybe even the next week, is red. But I do think that we do need to test some of these trend lines that are in play right here. I do think that the SPY does come up to test most definitely this line of resistance on the overall downtrend, dating all the way back to its all-time high in January of this year, which is this cyan line right here. I do also think that if this trend line is broken, then we can make our way up to retest broken support, which is this purple line, as new resistance, which would be TA 101. In the case that we do test, say we do test this line of resistance on December 1st, that would take the SPY to about 406, 407. Maybe we break above that, and it takes a little bit for the SPY to make its way up. But hey, if this falls in line, let's see where it fall in line. If we do test this line of support, where Deutsche believes, where does Deutsche think we can get? 420? Yeah, 4,200 in the SPX is 420 in the SPY pretty much. So 420 in the SPY would be right around December 12th, which is mid-December again. So again, you guys, a lot of this is just lining up pretty beautifully. It's always possible that this does not pan out, but the game of trading is using the data sets available to you in order to give yourself the best odds possible, and of course, take on a trade and capitalize on the odds that you've set for yourself. If it's 60-40 odds and you're winning on that small margin, over time, exponentially, you increase your wealth, and that's really what matters, okay? So again, focus on those exponential wins. It's been a tough, the short term has been a bit tough, but we always come back, and I'm thankful to say that Waves Cap over time is well in the green, okay? Again, you guys, that's just the game we play, and you adapt and move on. Like volcanoes erupting, trust me, there have been many volcanoes that have erupted in my portfolio, and we always come back. All right, you guys, we always do. So let's close out with the Qs real quick. And just keep it simple right here, you guys. Again, the Qs also in a very evident downtrend. Very solid line of resistance in play here, dating all the way back again to pretty much the new year, the beginning of the new year. Touch point here, creating the line of resistance. I do think that the Qs do come up to test this line of resistance, which on December 1st, that'd be almost 7% up from current levels. If we test it December 12th, where we just set that last target, it would bring us just under 300. So I do have a 300 target on the Qs. It is possible that we break out of this, and if we break out, we'll cross that bridge when we come to it. But what's good news for the NASDAQ, because it's so tech weighted, so growth tech weighted, is good news for the Waves Cap portfolio, because of course we're not trading like FANG stocks or anything, actually trading no stocks within the NASDAQ itself, but growth tech, we are definitely trading small to mid cap growth stocks, and when the Nasdaq's doing good, when ARK Innovation ETF is doing good, when the Russell 2000 is doing good. Our portfolio is typically doing good, and the Nasdaq is pretty much the best indicator of, once again, just the growth sector from a macro perspective. So again, you guys, maybe the west of this week is red, but I do think that the next wave is coming, and I'm excited to see what happens in the month of December. Again, if you want to trade along with me on a day-to-day basis, it's the first link down below. And if not, I appreciate you watching this one, and I'll see you in the comments downstairs. Until next time, you guys, always remember, take action, make waves. Peace.